welcome to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Riya Singh, technical analyst, currencies joining in. Riya, welcome to the show. Riya, we've had two major events that have happened yesterday. One is an ad hoc announcement in India with regards to where rate hike is concerned by 40 basis points. And you have Fed, which has gone ahead and hiked rates by 50 basis points and clearly said that there was no intention with regards to, so far with 75 basis points as well. What has been the impact in terms of where the currency market goes?
Well, if you look at the Fed, yes, I think the market was already discounting 50 basis point, but of course there were talks of 75 basis point as well. But if you look, like you said, it has clearly sidelined the expectations, because he has clearly stated that even in the upcoming two meetings, what the FOMC is eyeing is a 50 basis rate hike. So I think that part is quite clear, that 75 basis rate hike at one go is clearly not in the pictures. Secondly, I think if you look at the tone of how the Fed has conveyed this FOMC meet, and as compared to the previous one, because see, the previous one was quite hawkish in its tone. They were very aggressive, and they were quite prominent in delivering the message, and even in the tone, quite hawkishness was seen. But when you look at the current speech, of course, they have said that they'll be moving from 30 billion to 60 million of the liquidity removal. But of course, if you look at the tone that they have set into the whole, it's not that hawkish, as it was taken by the market. So I think the FOMC is considering that if they go with a very hawkish tone or a very aggressive stand in removing the liquidity, it will definitely hamper the economic recovery that they have seen. And even in his statement, he has said that, because as they are moving forward, there were quite questions with respect to how it will affect the economic recovery, whether it will, accelerate the recession into the economy and such. So, of course, liquidity removal will hamper some of the economic aspect. Already, US is seeing a negative GDP growth. So now, if they go very aggressively, it will accelerate that. And, instead of economic recovery getting back into place, it will further sideline into the negative perspective. So this is one of the reasons why this major liquidity removal has been postponed to June month. So there is a period of 1 month where they will be seeing how the events and how the economic will play out. But the major concern was inflations. They have sidelined the supporting the economy, or putting the economic recovery into the major picture, because inflation has accelerated at 8.5%. I think they have therefore come with the rate hike, and they have set the target at 2%, but of course, it will take quite a few bit of rate hikes to get the inflation down to 2%. So overall, if you look at the dollar index, it did come down from 103.50. It was trading above that, and it had come around 102.85. So this is clearly indicating that everything was priced in. Even if you look at the US economy, US domestic market, capital market, Dow Jones and such index, where they were into, generally such aggressive rate hikes brings down the market, but it recovered quite swiftly, and dollar index also lost its strength. So it clearly indicates that the event has been over and everything was quite priced in. Now we will see moving forward, after a month, like they said, that they'll be withdrawing the liquidity after a month. So they have said that they'll move forward with the 30 million first, and in the upcoming June also, what will the aggressive stand come back, or will they move towards slightly dovish stand? How are they seeing the economic picture after that will put forth the further guidelines. But I think in the upcoming two meets, 50 basis point, 50 basis point, 250 basis point rate hike is something that we could see. And I think dollar index will trade, between 102, 103.50, or possibly between 102 to 104. So this will be the range where you could see dollar index heading. And then for the second question, the RBI did surprise the market with the rate hike of 40 basis point. I think it was quite a good move because it definitely did compensated some of the weakness that we could have seen from the 50 basis rate hike of the dollar index of the FOMC. So I think if you look at the tone of the RBI as well, they have also centered the inflation. They are targeting to get the inflation down, and rather than just being accommodative and supporting the economic recovery. So they have also done a CRR rate hike. So a major focus is to get the liquidity out of the market. Now, if you look at the numbers, they are targeting at 87 billion rupees. So here they have done a rate hike of 4.40 basis point. And on the other hand, that they'll be doing is cash reserve ratio of 50 basis point. So on one hand, definitely that lending will stop, because though the bank will have the positive from getting the rate hike on their loans that they have already dispersed, but they'll be they will be with the cash reserve CRR at 4.50%, they'll be mandated to put the that part of the reserve with the RBI. So RBI has clearly tied hands with respect to the banking into the picture, and where they are seeing the liquidity getting out of the market. So overall, I think liquidity tightening and these inflation getting down is what the major central banks are right now eyeing. So this is the crux of the whole two event. And going forward, I think Indian rupee will be factoring in the same thing. We did not see the major downfall even when the dollar index was at high, or when the crude oil peaked. There were talks of 80, but of course, I think rupee will anywhere lie between 70-50. That is the max upside that we can see. And right now, it will, I think, be trading sideways to the weak momentum. So I think this is the range that you could probably see is right now again 77.50 to 76 levels. I don't think so it's breaching those range anytime soon.
Right. So overall, with all of this said and done, Riya, what are the strategies that you would recommend?
I think in the intraday session, we have seen quite a dramatic open for the Indian rupee, and it has again moved towards the depreciation part. So I think if you look at the strategies, the two strategies that you can follow is going long into the USD INR above the level of 76.45. The target that you'll be putting is at 76.60 and 76.78. Maintain a strict SL at 76.25. You can also buy 76.25 call of 13th May expiry. And this is at the range, it is trading around the range of 0.22. You can put a stop loss at 0.05 and target at 0.4 to 0.55. So these are the two strategies that you can go forward with.
Right. So these are strategies one should be watching out for. Thank you, Riya. Thank you, participants, for joining in.
Thank you, Hiral.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.